Hello students, today I would like to welcome you all to this video. In this video, I'm going to solve a Cambridge O-level exam in front of you guys. So the paper that I'm going to solve today is 7707 Accounting Variant 22. So it's paper 2, May-June 2023 attempt. So let's start with the question number 1 that we have in this paper. So its first question, let me read the requirement first. So it says that we have to prepare the complete cash book on the opposite page and bring down the balances on 1st May 2023. So let me read the question first. Umar is a trader. The following transaction took place in April 2023. There are some transactions that we need to record in the cash books. So let's move on to the next page to start making this cash book. Alright, so that's the format that we have for the cash book. So we already have the opening balance of cash on debit side, and we already have a back overdraft balance on the credit side. So let's read the question and start posting the transaction. So the first transaction that we have in the question says April 3rd we paid 1000 into the bank from his personal money. So the personal money means the capital account, and deposited into the bank account, it means our bank balance is going to be increase. So we are going to record this on the debit side into the bank column. So let me write it down. So the amount is 1000. That will come up here. So it's because of the capital, because it's an investment from the owner, and the date is 3rd of April. So I'm going to write down 3rd April here. That's the first entry that we have in this cash book. So the next entry, it says the paid $360 to a supplier Alexander by telephone transfer. Here I would like to mention to all of my students that whatever written here instead of the cash, standing order, direct debit, telephone transfer, online transfer, whatever it will be, it will be adjusted in the bank column. So it's a payment from the bank to Alexander, a supplier, 360. So obviously that will come up on a credit side. So here I will write it down 360, and the name of the supplier is Alexander, account. So the date will be 7th of April. So that's the second entry. The third transaction that we have here says cash sales $695 were paid directly into the bank account. So the bank account balance will goes up. So we'll write down on the debit side. So 10th of April, $695, and it says with the sales, and date will be 10th of April. So that's the entry. Now moving on to the next transaction, it says on 12th of April purchased goods $340 on credit from Alexander. So we purchased goods on credit, but we have not paid anything yet. So as we do not have any payment or any amount received, so we will not going to record this transaction into the cash book. So leave this transaction and move on to the next transaction. It says 15th of April we paid $68 cash for petrol. So this is going to be recorded in the cash column, and it's in payment. So I will write down here $68, and it's because of petrol. So I'm going to write down motor expenses or petrol. in the bracket you guys can write it down like this. So the date will be 15th of April. Yes, 15th of April. So it will come up here. So now the next transaction that we have, it says paid rent $400 by standing order. Again, it's a standing order, it means it's going through by bank account, so it will come up on the credit side because it's a payment. So I'll write down here $400 and it's for the rent, so I'll write down rent here, rent expense account, or you guys can write down rent expense account, and the date was 16th of April. So that's the transaction. The next transaction that we have, it says received a check 384 from a credit customer SME in full settlement of an invoice of 400. So we're supposed to receive $400, but we receive 384. It means there is a discount involved, and the discount is $16 because we received the check, so it will come up on the debit side. So we'll write down here, so it's 384 in the bank column, and the discount is the difference between 400 and 384, so it's $16. That will come up here because it's a cash discount, so we'll record this one into the discount allowed column. And we received this from SME, so we'll write down SME account here, and that will be on the date of 23rd of April. Alright, so the next transaction we have in the question is 27 April paid $323 by check to Alexander, having deducting $17 cash discount. So having deducted mean it's already adjusted with the discount of $17, so we don't need to deduct again 17 from this balance. So 323, because it's a payment by check, so 323 will come up here, and $17 is the discount received that we got from Alexander. So we'll write down Alexander account like this, and the date will be 27th of April. Alright, so that's the transaction that we have done, 27th of April one. And the last transaction that we have is purchase goods 235 on credit from Alexander. Again, it's a purchase entry, so it will not going to be recorded here in the cash book. So let's balance this off the cash book that we made here. Always remember that we do not balance the balance CD and balance BD, the cash and discount receive and discount allowed columns. So we'll just write the total of these two columns. So discount received simply 17 will come up here, and discount allowed 16 will come up here. So then we'll come to this cash column. We have this side is the bigger side, 120, so I will write down 120 here. I will move this 120 to the other side of cash column, and then I will deduct 120 less 68 to end up with the $52 balance. So I'll write down $52 here. That will be my balance carried down, and this will become my balance brought down of the next month opening balance. So the date will come up here. The April is the 30 days month, so I'll write down 30th of April here, and after April we have May, so I'll write down 1st May with the balance BD, the date. So let's balance the bank column now. So we have to see which side has a bigger value. So this side is most probably having a balance of more than 2000, and this side I can see that we have 7 8 plus 7 around 1500 dollars here. So this side has a bigger value, so let's add this 1000 plus 695 plus 384. So the total of this side is 2079, and I will transfer this 2079 to this side, and then I will deduct these four figures. Do not forget the opening balance as well, because most of the students, they forgot to deduct this 477, 360, 400 and 323. So that's giving me the balance of 519. So I will write down 519 over here, and then 519 over here. So that's the first requirement of our question. So we are done with the cash book. Alright, in the next part, it is required to prepare Alexander account. So we already have the opening balance, so we will look into the same transactions that we was given for the cash book. So we'll find out the transaction that we will record here into the Alexander account. So the first transaction that we have with the Alexander is paid $360 to Alexander by tiny phone transfer. So because the payment was done by the bank, so the bank account is going to be credited, and here it will come up on debit side. So I'll write down here with the bank account, because it was credited into the cash book. So here is this account will debit, and the amount was 360, and the date was 7th of April. So I'll write down 7th April here. So the next transaction that we have with the Alexander, so let me see, yes, purchase goods $340 on credit from Alexander. So we'll do the debit of purchases. The double entry of this transaction is debit purchases and credit Alexander. So in the Alexander account, we'll write down here purchases account. So that will be $340. And the date was 12th of April, so 12 April will come up here. Alright, so the next transaction we have with the name of Alexander, it's yes, here on 27th of April, it says we paid $323 by check to Alexander, having deducted $17 in cash discount. So as we paid this, so bank account is going to be credited, and there is a discount receive, so that is also going to be credited, and it will be debited into the cash book account, as we can see in the cash book that we have done in the transactions. So the bank will come up here because it's a payment. So in the Alexander account, it will come up on the debit side. So bank account $323, and we also have discount receive, and that was $17, and the date of this transaction is 27th of April. So 27th of April and 27th of April. So that's the transaction of this payment that we made into this account. So the next transaction relating to the Alexander is the last transaction, purchase goods $235 on credit from Alexander. Simply purchases debit and Alexander credit, so it will come up here, the purchase account. So 235, and the date was 28th of April. So now after this we have to balance this account. So this side has a bigger value, so I will add this up, 360 plus 340 plus 235, which gives me a total of 935. So I'll write down here 935, and then I will move this total to the other side, 935, and then I will deduct these three balances from this. So less 360 less 323 and less 17, which gives me the balance of 235. So $235 will come up here as balance carried down, and it will become the balance brought down for the next month. So obviously again here will come the 30th of April, and then 1st of May will come up here. So that's the account that we have made for this business. So moving on to the next requirement that we have here, down here it says that Umar buy his supplies from Alexander, who does not allow Umar any trade discount. So Umar is now considering also purchasing supplies from Tahir, who would offer him a 3% trade discount but no cash discount. So advise whether he should choose option 1, purchase supplies from Alexander only, or option 2, purchase supplies from both Alexander and Tahir. So justify your answer, providing 3 advantages and 1 advantage of the option you have chosen. So while answering this question, so we have to select option 1 or option 2, and then we have to write down the 3 advantages or 2 disadvantages. So I will go with the option 1. Let's say if I'm going to say the option 1 only, so the Alexander, it says that alright, so it says that Umar does not allow trade discount Alexander. Umar is now considering to purchase from Tahir. Tahir would also trade discount but no cash discount. So here, as we have seen in the previous question, Alexander provides the cash discount but not the trade discount. So if we'll go with the option 1, so the advantages can be from this Alexander offer cash discount. So we can say that this is an option of by going with this person, but it's not offering the trade discount. So that's the first point that we can write it down. So we have to write it down in the sentence. That will be, obviously the requirement. So the next thing is, as we can see that the cash discount is obviously at the time of the purchase. So we already have a smooth relationship with Alexander, so that also build or maintain the relationship with Alexander. And the third one that we can write it down, the advantage. So because we already have a relationship, so because if we already using the products from Alexander, so there will be mostly no issues relating to the product specification. Means if the quality issues or any other issue relating to the product, so there is no issue right now because we are currently using the product from Alexander. So the disadvantages can be, obviously we can write it down that no trade discount on bulk purchases. So if we'll go for a bulk buying, we will not going to get any the cash the trade discount, or you can say that right. So because of competition we might get the good price. So no competition again with other suppliers, so there will be only one supplier. So that can be another option for answering this question. So that's the part C of this question. By solving this part C, so there will be the completion of this question 1. Alright, so in the next question we have some errors, so we have to record the correction entries. So let's solve this question. It says that Ramla Harris calculated her draft profit for the year ended 28th of February. The adjustment of Ramla ledger is not still to be made for the following items. So the first error is an amount of $99 owed to Ramla by Mai is to be written off as irrecoverable debts. So there will be an irrecoverable entry that we need to make. So that will be the error number 1. So irrecoverable is our expense. So irrecoverable account debit. So we are going to credit the my account. So that's the person is going to be irrecoverable, means bad debts. So the amount was 99. So that's the first entry. The second entry that we have is says the fixture and fitting 875 were purchased on credit from Padma. So we have to record this entry. It's simple. So it's a simple transaction of the purchase of a non-current asset on credit. So I'll write down here the second entry. So fixture and fittings debit, and we are going to credit the Padma account. So that's an easy transaction. So it's here 875. It's simple, a double entry. So the next transaction is a loan repayment of $500 had been incorrectly recorded as loan interest. So once we pay back the loan, so we'll record it as bank credit and loan account bank loan account debit. So instead of debiting bank loan account, we recorded as bank loan interest account. So we'll credit the loan interest account. So let me write down here. So loan interest account, we are going to credit that we wrongly debited, and we are going to the debit the loan account, bank loan account. So that's the transaction that we have, and the amount was 500. So I'm going to write down here 500 and 500. Alright, so the next transaction, the fourth one we have, it says rent paid 350 had been recorded as 530. So the rent is recorded more. So the rent paid 350 had been recorded as 530. It means we have to reduce the rent account. So rent is going to be credited, and because it's not says that we recorded only in the bank account, so I mean that think that it's going to be debited with the cash or bank account. Another thing while solving this transaction, we might move on to the next page to see if we have any suspense account. So we might record this transaction with the suspense, because in the next page we only have a draft profit correction and some theoretical portions. So I don't think it's going to be a suspense account, so that will be recorded with the cash in bank here, and the amount will be the difference of these two figures. So it's here 530 less 350, it's 180, so 180 will come up here. Alright, so the last transaction that we have, it says drawings $120 had been debited to the wages account. So the drawings account is supposed to be debited, but instead of drawings we have debited the wages account. So we have to credit the wages account and we have to debit the drawings account. So that's transaction number 5. So the drawings account debited and wages account, it needs to be credited with 120 and $120. So that's the first part of the question. It was for 10 marks, 5 entries for 10 marks. So moving on to the next requirement, the section B, it says that we have to see the errors or the adjustments. So, and for each of the adjustment we have to see if our profit is going to be increase or decrease and no effect. So let's have a look onto the transactions one by one. So the first transaction that we have, it says the irrecoverable account debit. Irrecoverable is an expense, it means bad debt, so it's going to be decrease over profit. So we'll write down this one here. So into the decreased profit, it was $99. So the next transaction that we have here is fixture and fitting account debit and Padma account credit. So this is going to be an adjustment into the SOFP, statement of financial position. Its note comes up into the income statement, it means no effect. So it says the no effect, so we'll enter the 0 into the no effect column. So the second one is 0 here. So the third transaction we have bank loan account debit and loan interest account credit. So loan interest is going to be, it was over expense, so it's going to be reduced. So expenses, when there is a reduction in an expense, it's mean our profit is going to be up. So we'll write down here the third one, increase in profit by 500. So the next error we have, the next adjustment is rent account is going to be down. Rent is also over expense, so expense going down, it will increase over profit. Cash and bank, it goes to the SOFP. Bank loan, it goes to the SOFP, that's why it will not going to be adjusted here. So the rent account is going to be decreased, so 180. The profit is going to be increased by 180. So the last transaction, again the wages account is going to be reduced by 120. Drawings will goes to the statement of financial position. So the wages account 120 is going to be reduced, means our profit will going to be up by 120. So we have to make a total of these columns. So it's here, the first column 500 plus 180 plus 120, which gives a total of $800. So we'll write down here $800, and this column has a total of $99, and there will be 0 here obviously. So once we are going to adjust this, we have to add 800 and we have to deduct $99. So I usually do a bracket, write a bracket here, so that makes an easy to understand. So it was 11650 plus 800 less $99, which gives a total of $12,351. So 12,351 is supposed to be written here. So that's the second part of this question. So moving on to the next question, it's a theoretical portion. As we already know that we always have at least 15 marks theoretical portion. That's from the examiner in the syllabus. So it says how the journal of item 1 complies with the prudence principle. So I have to come back again to the first journal entry. The first journal entry was for the irrecoverable debts. Obviously, the prudence states that, so prudence states that assets should not be overstated, and profits also should not be overstated. So with the irrecoverable adjustment, so irrecoverable reduces the trade receivables as well as reduces the profit as well as profit. So it's a true implementation of the irrecoverable debts. So it's a true implementation of the prudence principle. So it's fulfilled with the prudence the requirement. So the next we have how the journal entry for item 5 compliance with the business entity principle. So business entity, we only record the transaction of the business. So it says the drawings that debited to with the wages account, so that's drawings. So we will write down the business entity principle state that the principle states that owner personal transaction should not be recorded, that owner personal transactions should not be recorded. So with the drawings is the implementation of this business entity principle. So that's the second question that we have done here. You guys can write down any other statement here that should be comprises of, it should be have some sort of definition and the link with the transaction that was mentioned here. So that's how you guys can write it down, the answer of this section. Alright, so in the next question, question number 3, it says that we have to prepare a subscription account for the year ended 31st December 2022, balance the account and bring down the balance on 1st January 2023. So the question, it's about a favorite book club. Favorite book club is formed several years ago. The subscription amount of 52 per annum has remained unchanged since the club started. All subscriptions are paid by check or credit transfer. So the amount of subscription is $52. That's the first information that we have in the question. So we have some opening balances and closing balances, subscription in advance and arrear. We also have some receipts and payment balances. So at the end we have some information. It says the club had 128 members in 2021 and 120 in 2022. So the treasurer is aware that the 4 current members will not pay their subscription for 2022. She has decided to write the subscription off. So we have to write down this 4 of the subscription as bad debts. So let me check. The 4 multiply by 52, so 208 should be in the bad debts, in the irrecoverable debts adjustment. So let's move on. So we have here on the next page the format, the subscription account. So we always write down the opening balances first. So it says the opening balance, we have subscription in advance, that says over liability, because subscription is over income, so income prepaid is over liability. So opening balance of 260 will come up here. So balance brought down to $60. So the date was 1st January 2022, and the opening balance of arrears is the receivable balance, means we're supposed to receive this amount of money. So $468 of balance brought down will come up here. That's again on 1st of January 2022. The next thing that I always tell my student to write the closing balances straight away, so that will make this question more easy. So we have advance opening balance, means the prepaid closing balance of 156. So if the opening balance comes on this side, obviously the closing balance will come up here. So leave some lines. So write down balance carried down here $156. So we'll write down these two lines, the total of lines, and then we'll write down this balance brought down here as well of $156. So that will be on 31st of December 2022, and this will be on 1st of January 2023. Now similarly we also have the arrear balance of 1040. So we'll write down this one here as well. So balance carried down 1040 and balance brought down 1040, 31st of December and 1st of January. Dates are important. It will gives us 1 mark for the date as per the examiner report. So the next adjustment that we have is the subscription receive amount that we have here is 5356. So we'll write down bank debit and subscription credit. So we'll write down here the bank 5356. So the date will be the 31st of December. So all of the other transaction we can write it down with the 31st of December. So the next thing is we have to write down the subscription return off that we have calculated here, the 4 of the members. So we'll write down 4 multiply by 52 was the subscription of per annum. So 208 is irrecoverable. So we'll write down 208 because irrecoverable account debit and subscription account credit. So it will come up here. Irrecoverable account, so that was 208. So don't forget, if you guys write it down irrecoverable here, it's an expense. It goes to the income and expenditure account of this question as well. So the date again the same, 31st of December. So these are the transaction that we have here. So the next thing we have to just balance it off. So we have to balance it off so this side has a bigger value. So always remember, do add these balance BD and CDs as well. So 260 plus 5356 plus 208 plus 1040, which gives the total of 6864. So I'll write down 6864. You guys do not need to add this 156 because it's the next month opening or next year's opening balance. So but we do need to add this number balance CD. So right, transfer this here, so 6864, and then we are going to deduct these two balances, balance BD and balance CD. So 468 less 468 less 156, which gives a total of 6240. So 6240 will write down here. That will goes to the income and expenditure account. It's similar to the income statement that we make for other businesses. That will goes on 31st of December. So that's the first part of this question. Moving on to the next part, it says that we have to prepare the income and expenditure account. So the information will be starting from the subscription account balance that we have calculated on top. So subscription account, so that was 6240 that I have just calculated. So 6240 will come up here. Let me see if I do have any other income. So in the question, if you guys have any other adjustments or any other transactions into the receipt side, so that means it will be over other income, other source of incomes. But in the question we do not have any other income, so I will not going to write down that's only income that we have. And then we will write down the expenses. That is going to be the expenses section. So the first expense that I would like you guys to write down is the irrecoverable one that you guys have written here on top of this. The subscription account is 208. So because do not forget to miss this balance, so I will straight away write down this first irrecoverable account or irrecoverable expense balance. So that will be 208. Alright, so the next is we have to see the payments that we have made. So rent is paid, so 2080. So we do not have any adjustment relating to the rent here, the opening balance or closing balance of accrual or anything. So we'll straight away write down 2080 here with the rent expense. And the next we have insurance paid. So insurance we have 732, and we do have some balance of insurance. So insurance paid in advance, it's mean it's a prepaid. So we have closing prepaid and opening prepaid. And always remember, I tell my student that prepaid is going to be deducted in the income statement, and well, the opening balance is going to be added because it's going to be on the opposite side. So we have to 732 less 366, and we have to add 348. So I'm going to write down here, so that will be insurance expense. So in the bracket you guys have to write down 732 and less 366, and we have to add 348. So it will be easy to remember, guys, if you remember this. Less the closing balance, the prepaid closing is always going to be deducted in the income statement. So if you remember this less prepaid, so well, you have an opening balance that will be added up in the opposite value. So 366 is going to be deducted plus 348 is going to be added, so it gives me a total of 714. So I'm going to write down 714. So let's see if we do have any other expense. Yes, so we have general expenses 2498. We do not have any opening and closing adjustment for the general expense, so general expense is going to be right down here. So it's 2498. We have to look into the the non-current asset, because mostly the questions always have a non-current asset here, the club and society question. So we have to deduct and we have to adjust these to get the depreciation figure, the opening and closing balance of non-current assets. But we do not have any non-current asset in this question, so which means the depreciation is not going to be recorded here. So we have to add all of these numbers, so that will be the total of the expenses. So 208 plus 2080 plus 714 plus 2498, which gives the total of 5500. So we'll write down 5500. So we'll deduct this 5500 to get the surplus for the year. So that's similar to the profit for the year, but in the club and society question, known for profit making organization, we do not write the profit because their purpose is not earning the profit, not making the profit. So that's the surplus for the year is 740. So we got this by deducting expenses from our subscription. So that's the section B of the third question. Alright, so in the next section, section C, it says that advise the treasurer whether she should fund the purchase of the computer equipment by increasing the subscription amount. Justify your answer by making points for and against increasing the subscription amount. Calculations are not required. So the treasurer is considering increasing the subscription amount in order to obtain sufficient funds to purchase computer equipment. The equipment would cost $400 and it would be used to maintain the club records. So if we can see in the question here, it says at the start of the question that the treasurer had a subscription amount is $52 per annum, which remain unchanged since the club started. So we have to write down the points for and against the rise in the subscription amount. So the first point that we can write down in the favor of this is because it is unchanged for several years, so the change will be acceptable to the subscribers, to the the subscription providers, to the subscribers. Or the second point that we can write down here, like if we are going to raise the the subscription, we want to go for loan, bank loan or any other sort of finance. So we don't need to go for loan, and we can save the amount of loan interest. That can be 2 points that we can write down for this option, that we should raise our subscription amount. And if we are going to talk about the against points, means the disadvantages, so we can write down the disadvantage. The first disadvantage, maybe it's in the competitors or subscribers do not accept the raise. They do not accept the rise in the subscription. Or we can write down, because it's a competitive market, so they may switch to the competitors. So that can be a point that we can write down against the against this raise. So if there can be another point that we can write down here, it's it's related to the business studies, so you guys can write it down, like maybe the business is in the decline market. So in the market where we do not have decline stage, so raise will not be acceptable. To the subscribers or market in which the business is running. So at the end, obviously, you have to give the advice. So there will be a 2 marks for the advantages and 2 marks for the disadvantages, and the last mark is for the advice. So that can be the treasurer, or you can say the favorite book club should go with the rise in the subscription amount. So that can be the answer for this 5-mark question. So the next requirement of this question says the state the meaning of the following terms. So receipts and payment account, it's similar, it's a cash or bank account of a club and society business. Club and society business. So in club and society business, the cash or bank account we name with the receipt and payment account. So the last thing is accumulated funds. As we know, the accumulated funds is similar to the capital account in the club and society business. So we can write down accumulated funds are funds available after, or can be calculated. You can write down calculated as well, calculated after deducting liabilities from assets. So that's similar to the asset minus liabilities is equal to capital. So it's similar to in the club and society business, asset minus liabilities is equal to accumulated funds. So that's the end of this question number 3. So moving on to the question number 4, here we have, it says that prepare an appropriation account for Aquila and Darius for the year ended 30th April 2023. So it's a partnership question. So we have interest on capital here, we have interest on drawings, we have a salary 9,500 per annum, and we have residual profit and losses to be shared 60% to A and 40% to D. We also have some balances, opening balances of capital and current account, and drawings for the year ended 30th April 2023. Profit for the year ended 30th April 2023 was 42,304. So let's move on to the next page to solve this question. So we have a format here. I'm going to put this format in front of you guys so you guys can see the clearly. So we will start from making this appropriation account from this figure, the profit for the year. So here I'm going to write down the profit for the year. Profit for the year, and that is a total of 42,304. So 42,304, that will come up here. The next adjustment that we need to make here is starting from this first one, interest on drawings, because this is the figure that we need to add into the profit for the year. So interest on drawings is 5%, and we have drawings 19,400 and 16,320. So we need to add interest on drawings. Add interest on drawings. So we have two partners, the first one is A and second one is D. So we have to calculate multiplying this 19,400 with this 5%. So 19,400 into 5%, which gives me 970. So I will write down this 970 in front of A. And the second figure is for the D is 16,320, and 5% of this 16,320, it's 816. So I will write down 816 here, and I have to add this, both of these figures, and this I will record this here. So it will be 6, 8 plus 9 is 17. So 17 will come up here. Now I have to add these two numbers, so let me use the calculator. So it's 42,304 plus 1786, so which gives me a total of 44,090. The next adjustment that we need to make is less interest on capital. Interest on capital of both A and D. So we have to see that interest on capital in the question is 3%, and the capital amount is 90,000 and 65,000. So for the A is 90,000 into 3%, which gives me a total of 2,700. So against the A, I will write down 2,700. And for the D, the capital amount is 65,000, and I have to take 3% of 65,000, which gives me a total of 1950. So 1950 will come up here. So I have to add these two. I have to transfer these figures to here, so which gives me 4650, and I have to deduct this from this number. So I'm going to write it down after deducting this. So 44090 less 4650, which gives me a total of 39440. So 39440 will come up here. Now the next adjustment I need to make is the salary. So salary to A is 9,500. So I'm going to write down salary to Mr. A is 9,500. That is going to be deducted as well. So less 9,500, which gives me 29,940. Now this balance is available for the distribution among the partners. So profit sharing ratio, we have 60% to A and 40% to D. So of this value we have to give the profit sharing, so that will be A and D. It's 60% to A, so 29,940, we have to take 60% of that, so which gives 17,964. So 17,964 will come up here, and the 40% of that is, so we can also just deduct this from this value, so we'll get the 40% as well. So 11,976. So 11,976, that's the total of the profit share. So I will add this up, so 29,940. So that was the available profit. It's the same figure, so there will be nothing left. So that's the appropriation account that was asked us for the 6 marks. So moving on to the next section of this question, it says to prepare a current account. So we have to prepare a current account of a partner only. So I'm going to use the same data again. So we have the opening balance here of current accounts in the question. So it says the current account balance of A is 2600 on the debit side. So I will write down balance BD here on the debit side, 2600. That was for the 1st of May 2022. So the next thing that I have to see in the question from the appropriation account, so interest on drawings that we are going to charge the partner. So we'll write down this on the debit side. So we have interest on drawing 970. So we'll write down in 970 here, and we'll write down interest on drawings. As well as we also write the full amount of drawings on the debit side. That is also the value that the Mr. A took from the business. So 19,400 will come up on the debit side. So 19,400, the total value of drawings made by Mr. A. So that's the debit side adjustment. So we have the credit side figures, and the first one that we will have is the amount that business will give to the partner. So the first one is interest on capital, so 2,700. So that will be paid to Mr. A. So I will write down here interest on capital 2,700. And the next thing is we also give Mr. A a salary 9,500. So write down 9,500, and that will be a salary. And the third thing that will come up here is the profit share. So the profit share will come up here, and that was 17,964. So 17,964 profit share. If we have a loss in the question, so that will come up on the debit side. of this current account. So because we earn a profit, so that's why it comes here. So the next thing is we have to balance it off. So to balance this off, let me write the dates first. So all of these transactions will come up at the year end. So year end date is 30th April. So we can write down 30th April 2023, 30th April 2023. So this will come up here for all the transactions. So now let's balance it off. So we have this side has a bigger value, so we'll add the total of this side. So it's 2700 plus 9500 plus 17964, which gives a total of 30,164. So we'll move this to the other side, 30,164, and then we will deduct this three balances, less 2,600, 970, and less 19,400, which gives me a balance of 7194. So 7194, that will be balance carried down, and it will become balance brought down for the next accounting period. So we'll write down here the 1st of May 2023, the next accounting period opening date. So rest of the transaction will have the year end date, that will be 30th of April, 30th of April, 30th of April. So that's the current account for 5 marks. So the next requirement of this question is calculate the balance of A's current account at 30th April 2023 if he had been due a 1000 loan interest from the partners. So the loan interest from the partners is also given to the partners, and it comes on the credit side of the current account if there is a loan from loan interest. So if there was a loan interest of this side, credit side, so we got a bigger figure here, means 1000 is the loan interest. So we'll have 31,164 here, 31,164 here, and we will deduct all of these, and then we will have the balance. But we have to think about, because loan interest is an expense in the the business, so it will reduce over profit. So because it will reduce the profit, so our profit share will be reduced. So how we can do this? There is a way that we can do that. Profit share will be reduced by how much? Because of this expense 1000, so 1000 the share of A, because we have to solve only for Mr. A, so the share of A was 60%. So we'll take the 60% of 1000, so 600 profit share is going to be reduced for this the profit that we earn from the business. And on the opposite side we get more 1000, so we have to adjust these two into this figure 7194. So that's the balance that we have, 7194 before loan interest. So we'll get the loan interest of 1000, and we will lose 600 because of the expense sharing. So that can be the adjustments that we'll have in the balance of opening balance or opening balance next year, opening balance of our current account. So the figure will be 7194 plus 1000 less 600, which gives 7594. So 7594 will be the answer. So the next part we have here is the theoretical portion. It says that A and D partnership agreement provided for salary, interest on capital, interest on drawing, and profit share state the two other items which usually included in the partnership agreement. So there can be interest on partner's loan, interest on partner's loan, and there can be a limit on drawings. Limit can be placed on drawings, limit on drawings that partners cannot withdraw more than this amount of money. Or if there is any other point like the hours work, or like the responsibilities among the partners, so that can be part of the partnership agreement. So that's the part C of this question. Moving on to the next part is the theoretical part of question number 4. Yes, it says A and D are considering to forming a limited company. So there will be only two shareholders in the company, and we have to give two advantages and two disadvantages of forming a limited company and then advice. So advantages, it's a easy question. Advantages that we can write down with the company. So that say it's a limited liability status will be enjoying. Limited liability means that the businesses, when they are winding up, so they have to pay to all of their the liabilities, even by selling their own properties in the sole trader and partnership businesses. But in the companies, they are only liable up to their shareholding, so their personal properties will not going to be affected on the time of wind up. So limited liability status, that can be an advantage. So second advantage that we can write down here, it's easier for them to raise money by issuing the shares. So that's another. Ordinary share capital can be raised easily by issuing more shares. So that can be another advantage. So the second, the two disadvantages that we can write down here can be the legal requirements of company. So obviously it has more legal requirements as compared to the partnership or sole traders. So there is another thing that can be formation cost, company formation cost, that you guys can write down here. So company formation cost will also be a disadvantage. So the last thing that you guys can write down is the advice. So Mr. A and D should go for company. So that can be an advice. So you guys have to write down this in the sentence form. So it is not acceptable to write the points like this. So you guys have to write these into the sentences, then it will be acceptable to the examiner. So limited liability status, so the companies can enjoy a limited liability status. The company can raise the ordinary shares by issuing more shares so easily as compared to the partnership. So these can be the advantages or disadvantages. Alright, so moving on to the last question of this paper, question number 5. It says that we have to prepare a corrected trial balance and show the remaining difference between the debit and credit totals as a suspense account. So we have some figures up here. The trial balance figure Amadi. So it contains errors, as we can see here. So it says that prepare the following transaction, but it is not totaled and contains some errors. So let's make this in the next page. So we have next page figures, the format. So I'm going to use the figures from this page to fill this up. So we have a fixture and fitting and equipment at cost 30,000. It's our asset, so it comes up on the debit side. So the first one will be 30,000, that will come up on the debit side. Provision for depreciation is 7,500. So 7,500 will come up on the credit side because it's going to be reduced over non-current asset. The next figure is trade receivable 6,500. It will be 6,100, so it comes up on the debit side. The next figure is bank overdraft. It's our liability, and liability comes up on a credit side, so 3106 will be on the credit side. The next is trade payables 3485 was on right side, credit side 3485. So the next we have to write is capital. Capital again comes on the credit side is 20,000. So was on right side, we will again write down on the credit side. The next is sales. Sales also comes on credit side 73,250. So 73,250 will come up on the credit side. So the next to sales we have purchases 41,785. That should come up on the debit side. So 41,785 will come up here on the debit side. Alright, so after that we have discount receive. That's our income. It comes on a credit side. So 1990 will come up on the credit side. So the next figure we have return inwards. Return inwards is the name of sales returns. So sales return comes up on the debit side because sales goes on the credit side. So 3390 will come up here. The next of this we have carriage inward. Carriage inward is our expense, and that comes on debit side 1223. So 1223 will come up here. So the next we have general expenses. It's an expense, so comes on debit side 6430. So 6430. Rent and rates is also our expense 7380. So 7380 will come up here. We have other figures. We have drawings, and drawings also comes up on a debit side because it's an opposite of capital. So 9,500 drawings, 9,500 drawings. And then we will have inventory, opening and closing. We only record the opening inventory. We do not record the closing inventory, and opening inventory comes up on the debit side. Closing inventory will be written in the adjustment section of all the questions in which we have to make the income statement. So opening inventory figure is 3752. So 3752 will come up here. So now we have to balance it off to see where our suspense account will come. So we're going to make the total of both sides. Let's make the total of credit side first because it has less entries. So here we have 7,500 plus 3106 plus 3485 plus 20,000 plus 73,250 plus 1990, and the total is 109,331. So I can write down this here in the space available down there, so we'll have 109331, so we can write down here. And now we are going to see the total of the debit side. So the total of the debit side will start from here, the 30,000 plus 6,100 plus 41,785, and then we have 3390, and then we have 1223, we have 6430, we have 7380, we have 9500, we have 3752. So we have to be very careful while making the total, so there should not be any missing figure or any figure written incorrect, so that gives me a wrong amount. So 109560, that's the value that we have. So we have to write the both values here down there, and we have to pick the bigger figure. So the bigger figure is 109560, so 109560 and 109560. It's similar to the how we make a T account balance. So this side has a bigger value, so we'll write the total on the both side, and we will deduct the total of the credit side figure, and that was 109331. So let's 109331 is the difference of 229, so that comes on the credit side because the credit side has a less total. So that's how we make the trial balance corrected. Moving on to the next requirement, so we have some errors here, and we have to make the suspense account. So the suspense account is starting with the balance of the difference in the trial balance. So we already have calculated the difference in the trial balance on the credit side is 229, so I'll write down here 229 on the credit side as difference in trial balance. So after correcting the errors above, this T account must be closed. So let's have a look on if we are solving this question. So we have a general expenses account had been undercosted by 200. So to correct this error, we have to increase the general expense. So general expense is going to be debited, and the suspense account is going to be credited. So we'll write down here on the credit side 200 with the general expense. So that can be the adjustment. So the next error is the rent payment of 516 had been posted to the rent and rates account as 615. So the rent and rates is going to be increased. So 615 less 516 is going to be increased by 99. So to reduce this rent and rates, we will credit rent and rates account and we will debit suspense account. So it will come up here. So that will be rent and rates account adjustment. So the third error we have here is the total of the discount received in the cash book of February 2023 165 had been debited to the drawings account, and no entry for this total had been made. So we have to credit the drawings account to correct the drawings account figure, and we have to credit the discount received as well. So there are two credits in this transaction and one debit, that will be suspense account. So we'll write down both here. So drawings account, and we'll also write discount receive account. So the both will goes with the same figure 165 and 165. So these will be the correction entries of the errors above. So let's see if we correctly solve this entries or not. If we have the both sides equals, which means our question is correct. So 429 will come up here, and 165 plus 165 plus 99, which gives me a total of 429 again. So it means our entries are correct. So the date that we can write down here is the year end date, and the year end date was in the question, the corrected trial balance question we had 31st of March. So all of these transactions will be on 31st of March 2023. So 31st of March. Always tell my student, do not ignore the date column. If you do not know the dates, write the year and date, so that because mostly examiner says that 1 mark is for the dates. So the next requirement we have is prepare the trading section of Ahmadi's income statement for the year ended 31st March 2023. So we have to prepare the trading section of the income statement. So it's here. So we can use the data from this, as well as the corrected trial balance, as well as the errors that we have solved. So because the errors, we do not have any adjustment relating to the trading section, because general expenses goes to the other expenses, rent and rates goes to the other expenses, discount receive and drawings also goes to the other income and SOFP drawings. So it will not going to be adjusted in the trading section. So we'll have here the trial balance, corrected trial balance figure. So we'll use this data to make trading section. So first figure that we are going to have is sales revenue. So we have sales revenue of 73,250. So let me write down this. So we'll have sales revenue, and that is 73,250. If we have any returns, yes, we do have return inwards. So that's sales returns 3390. So we'll write down here less sales returns, and the figure was 3390. We'll deduct this and we'll get our net sales figure. So 73250 less 3390, which gives 69860. So 69860. The next section is the cost of sales section. So I'll give the heading of cost of sales, and we'll start this with the opening inventory. So we'll have opening inventory, and the opening inventory in the question that we have written here 3752. So 3752 will come up here, and we have to add the purchases. So we have purchases here under the sale 41,785. So we'll have purchases 41,785. And if there is any purchase returns, we do not have any purchase returns in the question. So we can see that if we have a carriage inwards, yes, we do have carriage inward. So carriage inward will going to be added 1223. So we'll add up here, add carriage inwards, and that was 1223. That will be added. So now the next thing is the closing inventory. We had closing inventory in the question. So let me show you the closing inventory figure. It says here 39 65. So 31st of March 2023. So 3965 is going to be deducted. So less closing inventory. Now we have to make a total of this, so that will be the cost of sale figure. So 3752 plus 41785 plus 1223 and less 3965, which gives me the total of 42,795. So I'll write down here 42,795. So we have to deduct this from the figure above to get the gross profit. So 69,860 less 69,860 less 42,795, which gives me 27,065. So 27,065 will be the gross profit. So this was the trading section of the income statement, which gives the 4 marks. The next requirement is for this question is to calculate gross margin. So we know that gross margin ratio is gross profit into sales multiplied by 100. So we have the gross profit in the question 27,065, and we have to divide this by the sales, and we have to use the net sales after deducting this sales returns. So the net sales we have here is 69,860. So 69,860 will come up here. 69,860 multiplied by 100, that gives the answer. So 27,065 divided by 69,860 multiplied by 100. So this gives the 38.74%. So 38.74% is the answer. For the the ratios, it usually asks for the 2 decimal places, so do not round up these numbers. So you have to write 2 numbers after the the full figure. So that's the end of the section D. So now the last section that we have for this paper is section E. It says that Ahmadi main competitor is Hector, who owns his own business premises, and Ahmadi and Hector have similar gross margins, but Hector has a slightly higher profit margin. So profit margin is higher. Why the profit margin is higher? Obviously because the gross profit margin is similar, but the net profit margin is higher because of the rent of the premises. So the profit will be less of the Ahmadi, because he is not paying the rent. So there can be a difference. Ahmadi is paying the rent. So explain whether or not Ahmadi should be satisfied with these results. So Ahmadi is paying the rent of the premises. That gives less amount of profit as compared to the Hector. That's why Amadi has less profit margin. So that can be the answer for this question. We can also write the other points as well. Maybe Amadi has other expenses as compared to the the hector, so that's why it has less profits. So less profits will gives the less profit margin. So that's the end of the paper that I've solved in front of you. So if you have any questions, any comments, or any suggestions, please write down in the comment box. So thank you very much.